Enterprise Plus is a product where a producer buys the enterprise units at the federal crop insurance level, and then the Plus product they buy basic or option units at a lower coverage level as part of the plus of this product.
So as an example, the farmer might buy 85% coverage for their enterprise and be given 75% coverage on each of the individual units inside that enterprise.
The enterprise unit product at the federal level is much lower cost than the optional or basic units, but many farmers still want that optional or basic unit coverage, and this product gives the benefits of enterprise coverage plus the advantages of optional or basic unit coverage.
In a year like 2011, where there were very variable yields across individual units, Enterprise Plus might have made a payment on some of the subunits, even though Enterprise itself wasn't triggered.
And a lot of people would use this if they have different cash rent landlords and want to cover the variability or the cost of each of those individual landlord situations.
Producers who have lots of underlying units that might be naturally assembled into up to 7 basic units might find this to be a big advantage, because they can still get the benefits of enterprise coverage, the higher subsidy rates, and the easier, in a sense, easier to construct insurance, but still have insurance on the individual side.
Either has a lot of different cash rent landlords that would want to protect the returns from each of those farms would find this useful, as well as a farmer who had many different parcels spread out that wanted to provide additional protection for each one of those land areas. The other thing is probably an individual that has different cash rent landlords or different situation and wants to, again, ensure those have the benefits of Enterprise Plus, but then also provide protection for those individual cash rent farm units.
A really big change to crop insurance for 2012 is the trend-adjusted APH yield endorsement that allows a producer to essentially up their historic yields for the impact of trend through time. That will increase the APH or the coverages available, and that happens ahead of the Enterprise Plus decision. So that's just a basic change to underlying crop insurance, but it could be a great advantage to folks with good records.
And what we see in Illinois is that most counties have yields that are increasing 2 bushels a year. So what the trend yield product does is allow you to add 2 bushels for each year you're back from 2012. If you're in a county that has a yield close to 2 bushels, but your 2011 yield will be 2 bushels higher, 2010 4 bushels higher, and that'll give you a higher yield that's used in the guarantee calculation. So you get more coverage from that product.
Trend-adjusted yield was first proposed by and carried through the process at RMA by Illinois Corn Marketing Board, and then those of us at the U of I who helped with that product. So Illinois Corn Marketing Board thought it was important to ask RMA to consider the impact of trend, and this is the way they've incorporated the impact of trend.
And Illinois corn, or Illinois in general, would be concerned about this because we have some of the highest yield trends in the country. So it benefits this area and corn and soybeans the most. I think of it more, you get the benefit of Enterprise Plus, which if you go to our enterprise units, and you can do a higher price selection at a lower cost, and then if you're still concerned about yields on those individual subunits, you can use this plus to give you that advantage.